Episode 1 of the Financial Review Show. In this first video here, we're just going to go through a company, Spotify. I suppose just a brief word on the Financial Review Show. It's predominantly a educational channel. We'll be looking at some of your well-known companies, favorite brands, and doing a bit of a dive into their financials, making financials accessible through crafted visualizations. So we're going to look firstly at Spotify. So just from Wikipedia here, Spotify, a little bit of context. It's a Swedish audio streaming and media service provider founded in 2006 by Daniel Ek, the world's largest music streaming service provider. So that's, you may very well be aware of Spotify, a well-known company. So we're going to look at their financial statements and a few tabs here in this Excel document. So this information comes from their financial statements. So this is just a 4-year trend. So based on their most recent annual report, 2020, their revenue is 7.9 billion euros. So that's this orange line here. You can see it is so it was a period of growth. So it was a tech company which is experiencing exponential growth, really. So it was across the 4 years. You can see here from 2017 to 2020, their revenues have grown 93%. But still, I suppose with maybe a new company with revenues, there may be a lot of early costs with as well associated with that. So still loss making. In 2020, they posted a loss of 293,000 euros. That is 293 million rather euros. That is. So still loss making. So that's just the 4-year trend there, and gives a little bit of an idea. We'll look into some other visualizations in a few tabs to come. In this document here, we have got their balance sheet, really, and the top one here is assets. So you can see their asset base is growing. We'll look at what is making that up in a few slides time. The green here is total liabilities. So you can see that so as you can get the makeup here, so the assets are on the top, and then so how these are financed in terms of their the split between liabilities and equity is here. So liabilities would have made up most of the financing in 2017. You can see because that is made up by the larger category in 2017, whereas in the years from 2020, you can see that equity, I suppose, is making up a higher proportion. So we'll look at some of the ratios as well. So this is just the financial ratios. So the profitability ratios here, we've got the first one is gross profit margin of 26%. So what gross profit margin is, it's really an analytical metric expressed as the company sales less their cost of goods sold. So really for Spotify then, they say that their cost of sales or the cost of revenue consists of royalty costs and distribution costs related to their content streaming. So for every euro they make in sales, they have 26 cent left over after they deduct those costs of making those sales. But we said they're loss making, so they're actually posting a negative operating profit margin of 4%. And because they're loss making, they're still seeing a loss on that capital employed, and those workings are in this tab here if you want to see those. I just want to look at the high level here, really. Their gearing ratios, which is what the gearing ratio is. It's a financial ratio that compares some form of owner's equity to their debt or the funds borrowed by the company. So a lower figure is better here. So in 2017, they had quite a high gearing ratio of 81%. It looked as if in 2017 they had some form of convertible debt, so that debt may have been converted to equity, and then that has therefore reduced their gearing ratio. So around 2020, that's sitting around 18%. So some other ratios here. The current ratio is probably the best way to explain this one. If we just go to the slide here, we look at this 2021. So current liabilities are liabilities that are due within 12 months, and current assets, I suppose, are assets those that they expect to maybe realize or use within the 12-month period. So ideally, and the ratio should really be 1-to-1. So you could say that their current assets within the 12 months could meet their current liability. So slightly below 1 there. So that's that one. In terms of their efficiency ratio, so their trade receivable turnover days is on average. How often are they receiving money from their trade receivables? So that is coming down, which is good. Trade payables, in terms of the average, on average, what are they? How long is it taking them to pay their suppliers? On average, that's in around the 27, 28 days. So that just is their 4-year trends we can compare here, and the workings are available. A few visualizations to get into then. So in terms of the 4-year revenue, that's what we had seen in that first slide. Really, you can see that the revenues are growing across those 4 years. Operating loss is, you can see they have in this 4-year period they have not made a profit yet. I suppose with a startup or maybe a company in growth, that's maybe to be expected with just the costs in the early phases. I suspect as that starts to, as they start to the revenue start to level out, they may be looking to break even and then start to turn profit. But in terms of cash generated from operating activities, they actually have got positive cash across each of those years. So there's a difference between the accounting profit and the cash, so the cash flows. So there are some non-cash expenses which do make up the accounting loss in this case, but that just shows that their operating profits are in fact positive. So we've got another one down here. We'll look at their operating loss in 2019 was 73 million, and you can see up here the 73 million. It grew to 293 million in 2020. So we can see what's causing that. So if we go across this operating loss bridge, they started with a loss of 73 million, and then with the increased revenues less the cost to get the gross profit, there's actually a favorable movement in gross profit of 293 million. So that's a favorable movement year on year. But then that increase was added to these increases in expenses year on year. So R&D, research and development expenses increased 222 million. Sales and marketing increased 203 million, and then other general admin costs increased 88 million to reconcile us to what was impacting that movement from 73 million to 283 million. This next visualization here, what we have got is Spotify's balance sheet visualized. So assets are on the top. So you can see the non-current assets is this dark green, so that's assets they will consume in a period of greater than 12 months, whereas this light green is assets that they will maybe consume in a period of less than 12 months. So that's the asset base. And then how they are financed. So we've got the yellow is the equity, that would maybe shareholder financing perhaps, and then the liabilities. So just some of the key items over here making up the 2020 figure. So they've got 3 billion of non-current assets. 2.3 billion of that represents 8% holding in Tencent Music Entertainment Group. So Tencent Music is the leading online music entertainment platform in China. So they've got an 8% holding there. This 2.3 billion of current assets. 1.1 billion of that is made up of cash and cash equivalents. So we'll look at the cash and cash equivalent movements in a moment. Current liabilities are liabilities that are due within 12 months. So that's this 2.9 billion here. So 1.8 billion of that is for accrued expenses and other liabilities. And they have described that in their financial statements as mostly amounts owed to rights holders. So you think maybe the rights holders for the music or the podcast that they have in their platform or something of that nature. And then this equity then, the main items within that is 4.6 billion of paid in capital less they've got 3.3 billion of accumulated losses then. So that is bringing that 4.6 is being eaten into by the accumulated losses that have been built up over the years. So last visualization here then, this is our cash flow statement summary. So just to talk you through this one, in 2017 they had 477 million of cash and cash equivalents, and you can see it each year here in the blue bars. That is increasing every year. So in 2018 that grew to 881 million, 2019 just over a billion, and then almost 1.22 billion then 2020, and you can see what's impacting that cash is really this cash generated from operating activities is really having a favorable impact on their cash. Some outflow here during 2020 for some form of investing activities. So that is just a bit of an overview of Spotify. So this is episode 1. Just want to see how this goes. Really, we'll look to do a new company shows every week. So if you would like to engage in some way, if there's any thing you would like to look into, be happy to do that. So if you want to support the channel in any way, hit subscribe. These visualizations are also available through Gumroad. So if you do want access to these, either for the workings themselves, or if you want to use some of these Excel templates, if you think you want to, you could apply them in your own in some way, you can get the through Gumroad this Excel template, make that available. So thank you for watching, and catch you next time.